Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. We're going to be doing our weekly review of the three indexes that we follow: the ETFs, the SPY, the QQQ, and the IWM. If you haven't seen my previous videos or the previous video on this, we were just talking about, expect this to come down, and we were looking at this zone for our target. Okay, so we got there today. We are I still think there may be a room for it to go further down. Okay, but that doesn't mean it will or will not. So let's just see how this works out. For this specifically, let's just look at this. It's starting to have this 5-wave structure. Okay, so expect a 3-wave move up if it does have a 5-wave structure, and then expect another 5-wave move down. Okay, that is one of the possibilities that I'm looking at and will follow. We do know that this is in symmetry, so this move out, this move down is within the symmetry period, and also that we're getting close to this 61.8% move from Y to X. So what that means is just what that means is just this from there, this down here is 61% of this move, the W move itself. Okay, so it's worthwhile noting that we want to keep this as much as possible within the closing period. Okay, I closed off a bunch of my about 2/3 of my short in SPY today, and I'm expecting to hopefully see if we can hit this 420 zone, and maybe get a double bottom here, and then go from there. But for all extensive purposes, move this up. I do expect a smaller corrective wave before we see another move down. It does again have that 5-wave structure. That's what I am expecting, but anything can happen. So just be mindful that markets will throw you a curveball. They always do. But for now, let's just follow the trend, which way it's going. The trend is down. We're going to keep following the trend down. There is no reason to change bias for now, especially when it comes to SPY. We are in a zone to see if we could get a bounce here. I mean, if we don't get a bounce here, that things get really ugly. I will have more areas to watch. Obviously, you guys are looking at let me put this up. You guys are looking at this. Okay, so if it does get through this 420, 419, 420 area, then it opens up the door for this 401, 399 zone. Things could just get really ugly from there, or not. So let's see how this develops. So far, so good. It's following the script that we had set up. There is no surprises here. Only surprise was that this move right up here. I think that was the Fed move. You have the Fed meeting move where they came out and immediately gapped down and went down and went. So it's important to see and understand when you get these massive move up and then immediate gap down and gap and go. This and then just you have to start looking for these areas to start shorting again. If you haven't, I'm not sure what can be said of people that are not really are still have long bias at this point. I think you're just beating a dead horse. I think let the markets come back in. I do think that not every bear market won't be forever. They tend to be a lot shorter than bull markets. So just let things come in. Again, if you're not an active trader, let things come in. Save yourself mental anguish. Save your money. There is no long trade right now. Let the big money show us the way. There is no reason for you to be a hero or a martyr or anything like that. You just have to kind of, this is the one dance. You got to let somebody else lead. You cannot be the leader in this, especially when it comes to retail. I think retail investors and traders should have a good understanding that, the controls, the powers to be are the ones that are big funds that can actually have the power to move markets with the cash that they hold. So let's see how this develops. We are in a zone. Let's look for that pause if we can get it, or a corrected wave up, and we'll look to add on to the short if it does. Otherwise, we'll just close it out. I think if it starts going above this 435 area, I'm gonna have to start really, really, really looking at it as, okay, maybe this is more than just a pause. It may be, where we're going to start looking to go back up. And also just to be aware that if it does start going above 457, this last X, the last high, the transient high, the double top that it made, if it starts going above that, okay, if it starts going above this value, 457 value, that's extremely bullish, and you can look at the all-time high being hit at that point. Okay, so let's go to the next one. Let's see what we got next. QQQ's, same story. It's at a very, we are at this double bottom zone. Okay, it is, it got hit today. I not holding Qs at all, so I'm just trading SPY. But it's you can see the third, it's also has this three-wave structure that we talk about. One, two, this three-wave structure where the third wave, these Fibonacci levels correspond to this third wave, okay? So we know that it's extended. We know that it can extend all the way down to 319 and maybe more depending on if the momentum really comes in. We know if it breaks through, this 334 area, that it will shoot down pretty fast. If it doesn't, we get a bell total or something, but be mindful that it still has this three-wave structure and we're in the third wave. Expect a corrective fourth wave at this point, and then hopefully look to reshort to complete out this A wave, this A primary wave. Okay, there again, we ended a larger cycle in December, and we have been in a correction ever since. Just know that since this is a large cycle, this correction is occurring on a cycle level, that this will take a while for it to resolve. That is the hardest part that young traders don't understand, is that the time that it takes, that involves taking these things to get set up properly again to go long. Okay, there is no reason again to go long at this point if you are not an active trader. There is no reason to spend your money or mental anguish on something that you may know you get maybe a 1 or 2 hour, or maybe a day worth of moving back up, but it's not, there is nothing in this pattern that says that it's bullish. Okay, this is your stereotypical, stereotypical downtrend. The only thing that you can say, oh yeah, it's forming a flag, but let's be real here. We are done with the first cycle. We are into the second cycle, and second wave of the cycle, excuse me, and let's see how this develops and go from there. There are a lot of high flyers that have lost quite a bit of value, and they will, I think this is a time for them. We will find out if any of those businesses survive. Okay, if they do, that they're gonna start, either they'll get bought out or they'll start, their business model will change. Hopefully that they'll start moving back up. The Zooms, the Rokus, the really high beta stocks that QQQ holds. Tesla is having a very bad day today also. So just be aware, the trend is down, the bias is down for now, and short trades have given more than the long trades have. So I hope this helps. for the QQQs. Okay, so let's get to the third chart, IWM. I mean, there's nothing much to say. Again, we just quickly want to review that, we were looking for this move up and looking to short it at that point, and that I do have a short on. I think this is pretty, it's a pretty safe short because I know if it gets going above 207.21 like it did here, but it failed. Okay, it tried again, it failed. If it starts holding this area, then we're back into this Darvis zone and maybe expect to go to the top of the zone, which is 234. For all extensive purposes, I think we do see that 175. I think it's in the books that we it's it's in the books that we complete at least this zigzag. We complete the primary second wave. We get through this ABC and the 5-wave structure that we have going right now. That will be your simple zigzag. Okay, this is about as simple of a zigzag you can have. Okay, and both of these, as you can see, they are very well defined 5, 3, 5 waves. Okay, that's what matters. That, at least to me, that's what I want to see. That and that's why I was mentioning, if you had missed this money wave down, and the next, obviously the thing to do was to wait until we got up to 207, completed the fourth wave, and look to short to see if we can get some sort of momentum move down. Fifth waves tend to be very high momentum moves, where everybody's piling in at that point. Okay, we know it's short. Okay, let's just pile in. A lot of people will do that, and that's where capitulation will occur, and we can see things kind of slow down. Check your PC ratio, check your PC ratios on indices, and then go from there. I hope this helps. I think that there is obviously more downside. I think it still be okay if it got to 163. That is about 33% drop. I think if it was to happen, I think IWM becomes a very attractive. The stocks and the ETF become very attractive as the PEs go down. I think a lot of people will be looking for that buy in when it does drop there. For now, let's see how these geopolitical tensions play out. Let's see how inflation goes. I mean, if we're okay with geopolitical, but guess what? We're going to be back at inflation horse. So let's see how things play out. Let's see how things develop, see what markets react to it. Again, you gotta let market tell you what it wants to do. You don't have to be a superhero, you don't have to be a martyr, you don't have to do anything but just kind of be mindful, and be mindful of yourself, and be mindful of your trading. I hope this helped, and we will see you next week with another episode of the weekly review. Thank you so much. Have a great day. Bye bye.